Hello. What's up, guys? It is the FOMC meeting time. Today is the FOMC meeting. It's a massive day today because honestly, we have the highest chance of a surprise hike in like 30 years. I was checking on social media here. Just to put this into perspective, we had a pretty split market back in 2024 when the Fed cut interest rates 50 basis points, but we have not had this much of a chance of a surprise hike in 30 years, according to Goldman Sachs. With interest rate futures, this is from Nick Timmeros, with interest rate futures markets pricing in a 1/3 chance of a Fed hike today, whatever the Fed does today will be the largest quote-unquote surprise at a non-rate cut meeting since 1997, according to Goldman Sachs. And so rate hike fears are here. I still think we're going to pause rates today, guys. I don't think there's a chance. I mean, let me back up a little bit. There's a chance we hike rates. But I think the odds are underestimating the pause likelihood. I think they're overestimating hike likelihood. I think we have to take things into consideration, but there is a chance. It's not like a normal Fed meeting. Normal Fed meetings, as we get closer to the Fed decision, we usually pivot to one side and we get up to like 90, 95, 98, 99% likelihood of that decision. So we haven't had many meetings, especially lately, in which there's chances of a surprise like this today. The odds are not really weighted to one side in a huge way. There's still a 36% chance that we will be pausing rates or hiking rates today, which is a pretty decent chance, all things considered. Definitely relative to like previous meetings. But yeah, we have 41 minutes. It's also one of those things where, look, guys, I said this earlier. If we do hike rates today, the market is absolutely going to drop. Like, if we hike rates today, the market is going down. I did make a bet with my stream earlier where if we hike rates today, I got to give up vaping. So maybe it's time to, because, bro, Chuck, stop spamming, bro. What are you doing? Stop saying the same thing over and over again. I'm going to do a poll right now, though. I don't mean to do what he says, but I'm going to do a poll. Do we hike rates today? Yes or no? Do we hike rates today? We're going to keep it really easy. Do we hike interest rates today? Chat, you can let me know in the chat. You can vote on the poll. The NASDAQ and the S&P have rebounded a little bit from where they were when I closed the stream earlier this morning. They went all the way down in the NASDAQ to 27,409. This is mostly on memory sell-off, SanDisk, MU, SK Hynix. These are all down on the day on memory fears. And this is all mostly because of, the Chinese symbol that IPO'd. It went up 500% on IPO day, or 460%. And this is because they said they are getting into lithography machines to produce their own chips, right? So this is worries about competition in memory, worries about competition in chips. That is what's been dragging the market down. But today is a huge day for markets here. It's a huge day for markets. We also have big tech earnings after the Fed meeting. Now, just to give you guys some scenarios here, right? So if we pause rates as expected, it's going to pivot to what Kevin Warsh has got to say. I almost said Jerome Powell. What Kevin Warsh has got to say during the FOMC press conference at 2:30 Eastern time. If he comes out pausing but is hawkish, markets are probably dropping. If he comes out dovish, markets may go up. They may stay flat. If we rate hike and raise rates, markets are coming down. But again, let me know what you guys think. So far, there's a 70% chance that we do not hike rates today. It's pretty similar to the FOMC watch tool. But look, this is the graph this is the odds that are scaring people. If you look on the Fed watch tool by the CME group, we are at 34% chance. It's tightening up it's tightening up a little bit more, but we're at 34% chance of a rate hike today. Again, if we do regardless, it'll be the biggest potential non-cut surprise in 30 years since 1997, according to Goldman Sachs. And you can see this graph here, just to kind of see what we're talking about real quick. Again, this pre-meeting pricing puts the Fed in position to deliver its largest meeting surprise, whether we hike or cut, in 30 years, all the way back to 1997. And so we'll see if we end up doing that or not. But I think we're going to pause today. I think there's more, it's easier bet on a pause, of course. But it's still not nothing. And who knows what's going to happen here. Rate cut today? Yeah, that's definitely not happening, bro. We're not cutting rates, dude. That's just not freaking happening, bro. I don't even know why anybody would think that today. That's not even on the table. That's not even in these. There's no even percentage for that, which means it's virtually not going to happen. What's up, Chef? What's up, SpaceX? What's up, Nada? What's up, Mr. Crypto? You're wrong, Mr. Rate Cut, but that's okay. Leroy, what's up, dude? 1975. Hello, sir. Pew, Naren. Bob, Bull Market, OX, Bluebird, Heavy Assaulter, Just, Zeke, Fear of Being Small, Top Rank, Digital Content. Hello, guys. What's up? Leah, NC, Bull Market, Cursed, NY, Aleph, SpaceX Bull, Rubininsky, Chuck, even though you spammed, hello, Chuck. Blackberry Trader, what's up, dude? Top Rank, I think I said you already. We're gonna go through this big list. Killing Frenzy, my Halo friend. What's up, dude? NC, First Last, Shah, Incontrollable, JJ, Jimmy Suits, Dan, Ashun, Watermelon, Infection, Woggy, Digital Content. Hello, guys. Hello. Ben. Rate cut is bad, dude. I don't know. Rate cut. What's up, Stephanie's? What's up, Max? What's up, Slumdog? What's up, Ray? What's up, Ben? What's up, Fear of Being Small? What's up, Average Jones? What's up, Joker? Fred, Shake and Bake, Ox, World, and everybody else here today. Yeah, there's no freaking shot. There's no freaking chance we cut interest rates today. I think we're gonna pause, personally. But again, it kind of goes back to it. Generally speaking, ahead of these Fed meetings, and really ahead of the Fed decision is already pretty priced into markets. And so generally speaking, since it's not usually a surprise and we already know what we're going to do ahead of every Fed meeting, we don't really get a huge reaction. Today is absolutely different. Why? Because of these odds right here. Again, we currently have a 66% chance of a cut, but still a 34% chance of a rate hike. What does that mean? That means that markets don't really know what we're going to get today, which means that when we get something, whether it's a pause or whether it's a hike, it's going to be at least somewhat surprised. The 34% chance I think we're getting a hike will be surprised by a pause, and the 66% of people who think we're going to pause today will certainly be surprised by a hike. But I think it's even more than that. I think we're going to see shocks if we raise rates today. Even if, we raise rates today, 25 basis points, I think markets are going to freak the hell out. I think gold's going to dump. Gold is incredibly rate sensitive right now. Bitcoin as well. So gold and Bitcoin, incredibly rate sensitive. Here's gold. Gold's running up to 4,100. So I think the gold traders are betting on a pause today. And I don't necessarily hate that bet, bro. I think, at least when we get the announcement of a pause, which is the most probable thing, gold might react positively to it. But it's already up to 4,100s over the last hour or two. So I think those are just maybe somewhat smart gold traders pricing that in ahead of, a really interesting rate decision at 2 p.m. in 35 minutes. So, yeah, poll is 67% saying no. Yeah, even the poll goes right back to what the Fed Watch tool is like. Look at the odds on the poll. Odds on the poll are 33% chance of a hike and 67% chance of a pause. That's basically what we're seeing right now. Hold on. Hey, baby, I'm working right now. The street might be able to hear you. I ate already, but you can get me something from wherever we go. But I gotta go. Say hello to the stream, Carol. I don't know if y'all can hear. All right, baby, Carol. I love you. Bye. All right, Carol calling me.
Dude, I want something to eat.
You don't get anything to eat, Britt. You never share your food with me, bro. Why would I, get you food?
That is a bold-faced lie, sir. I'm not sure if it's bold-faced or bald-faced, but either way, it's a lie.
It's both right now, What would be the best case scenario for today? The best case scenario, in my opinion, would be, and again, that's a good question, Michael. What's the best case scenario? The best case scenario, in my humble opinion, would be a pause and dovish wash. A pause with dovish wash is probably the best case scenario. It might cause some inflation fears based off of dovish wash. And I don't necessarily think we're going to get that. I think we're going to pause today and have hawkish wash. So I still think we might go down from this, but who knows? Yeah, I'm on toss. I'm looking at the latest contract, but that's all right. But yeah, I think the best case scenario is like a dovish wash and a pause. Hey, thank you, Narinda. Appreciate you. Appreciate the sub. Thanks so much. But we are really green today in our trading here, and I'm wondering if there's some trades to get into. Like, is gold worth buying ahead of this? Like, if I want to make a big bet on gold, I don't know. Gold's already up a lot. I'm going to buy one micro contract in gold. You know what? I think gold's going to react well if we pause. But there's definitely risks heading into this decision. But I just bought one micro contract in gold. Dovish sounds like dovish
You
wash.
end up being a rich man, John.
I know, man. With my 1 micro contract of gold, maybe I am.
Yeah.
Buy or sell FOMC? I really don't know. Honestly, I genuinely don't know if it's a buy or sell the event for the FOMC. I'm gonna go with this. All right, and this is my thesis, and maybe I'm wrong here. Y'all can tell me I'm wrong, and I'll listen. Again, talk me out of this. But I'm gonna go with we're gonna pause today. Markets are already emotional from the hike odds, but I'm gonna go with we're gonna pause today. And initially, and again, keyword is initially. I think markets head up. NASDAQ heads up. S&P heads up on more optimism. It also depends on what the statement says. So they do produce a statement during the 2 p.m. release in 25 or in 33 minutes or so. So it depends on what the statement says. Like where the weighing of risks are in the statement is going to be a key factor. But I'm going to guess we react well to the Fed meeting or to the Fed decision. And then maybe Warsh comes out hawkish and we reverse some of that. Is what I'm guessing here. And again, this is just a straight up guess, but I'm going to go with a pause, positive reaction in markets, reversal when Warsh is hawkish. If he's hawkish. Big if. I'm up 2,400 today. Nice checkerboard. Yeah, his tone's going to be critical. I think we're going to, pause, but have a hawkish, dovish tone. I don't think you can be super dovish right now with where inflation is at from higher oil prices, especially if you look at markets over the last 24 to 48 hours. And they started the Fed meeting yesterday, right? So you know, at least some of them are talking about oil being up over the last week or two. Hey, thank you for the sub, my friend. Thank you, brother. I appreciate it. But yeah, at least some of them are going to be talking about oil being elevated over the last week or two, right? And with that elevation of oil, you know, it's going to be a situation in which they understand that, you know, we might get higher inflation data. Now, some of the arguments for dovishness are CPI print last time. The last CPI print was lower than expected, right? So the last CPI print was lower. It did decrease a little bit. But at the same time, like if we look at this, hold on, now gold's starting to fall. I'm just going to leave it. I'm up like 400 on the day or so. So I have room to leave it here. But I am going to set a stop loss down here at like 22s or so. You know, hopefully we hold up into the Fed meeting. We also had news earlier that White House official or senior official. I saw this earlier regarding who was it? Was it Hassett? I believe Hassett said some stuff earlier. I saw like Hassett. Go ahead, Britt.
I saw it. Give me a second.
Yeah, I saw it too. Hassett was saying he said he thinks Warsh is going to do the right thing, is what he says.
Oh.
Now, I'm assuming that means not be stimulative. Here it is. They expect Warsh to do the right thing. White House economic advisor Hassett. Is that what you were going to say, Britt?
Well, that, and he also said we expect downward pressure on prices.
Right, for sure. And with that, like, look, here's a CPI inflation graph. We talked about this a lot. But, you know, we were up to 4.2% inflation after June. Like, in the following meeting, yeah, the last meeting in July, we did have a little bit lower, or the last report in July, but you can see we did pivot down to 3.5%. But just to put this into perspective, this is from June when we pivoted down to 3.5% for inflation. This is an inflation graph. You can see the crazy inflationary aspects of 2020 and the ultra easing we did in 2020. You can see CPI just start to rise from government loans, stimulus checks, you know, obviously quantitative easing, money printing, as well as supply problems caused inflation to spike. And then the Fed started rate hikes, and that kind of helped slow inflation down some. And we got all the way down to here, but, you know, because of the Iran conflict, that's where this little jump is right here, is from the Iran conflict and the higher aspects of oil. But if we look at oil right now, like we can look at a longer term graph for oil here. Oil is elevated over the last week or so, especially. And if we look at June from when that last CPI print was, you know, just to put this into perspective, I did this morning. But here is June, right? So you can see how much oil prices fell in June. This is why inflation went down for the June report, is because oil prices decreased so substantially in June. The problem now is that oil prices are back up. And so oil prices are back up to here now. And so with oil prices being higher, that means that next month's report for CPI inflation will be higher as well, most likely. Unless the numbers just don't make any sense. But it's looking like inflation and CPI is going to be higher. Now, one of the biggest arguments for not hiking rates is that oil prices fell, inflation slowed, and that's all good. But now, next report, we might see some more. But because of that dynamic with the last CPI report coming in at 3.5%, lower than previously, lower than expected, again, I do think we're going to pause rates today. I do not think we're going to raise. I think logically, Warsh is going to have at least somewhat of an easing bias. Now, it's not just Warsh, and then there's multiple different Fed members, but Warsh is going to have somewhat of an easing bias. And the last CPI report we got was lower than expectations as well as lower than previously. So those things are why I'm really leaning towards a pause today. But again, there's still a chance. If we do hike, which is not the most probable thing in my opinion, markets are going to freak the hell out. So just be careful, guys. Be careful. Yeah, I think people are engagement farming in terms of the rate hike risks. I mean, there's a chance we raise rates. Again, 33, 34% chance is not nothing. There's a chance, but the people acting like we're absolutely going to raise rates today, they're just engagement farming, I think. So, Good Boy just tweeted we're getting a rate hike today. I haven't heard from that guy in a long time. A data-dependent approach would likely lead towards a pause. Yeah, I think it makes sense to pause. And again, I told you guys this morning. I've been saying this for a while now, but if we weren't in the middle of the Iran conflict with elevated oil prices, I'd probably be pushing for a rate cut. But that's not what we're in right now. Oil is elevated. It's $84, $85 a barrel right now for WTI crude. Brent is even higher, which is worldwide crude. So we are in the midst of elevated inflation over the last 6 months. We are in the midst of the Iran conflict with high oil prices, and so I don't think we have the green light to cut. I don't think the optics for a cut would be good, and I think that's because everybody understands we can't really cut rates in the midst of all the stuff going on. And it's another reason I don't think that we're going to cut today. The odds are not even showing a likelihood or a chance of a cut. So we should just do the opposite. I hope to hike. I mean, a hike would cause some fireworks. That's for sure. Yeah, so a hike would cause some fireworks. But it's unlikely, So, that's why it would cause fireworks, is because it's simply the least probable thing out there. I'm tired of winning so much. Hey, that's a good problem to have, bro. We should, you mean trolling a data-dependent approach?
Is that good? Charlie Sheen?
I think it is. Right thing would be a rate hike, guys. Seriously, for 2 decades, you could borrow at 1 to 3%. That's insane and should never happen. Yeah, but Dustin, the issue is that I think markets are now used to that. Markets are now simply used to that super low interest rate environment. And I mean, part of this is from, 2020, or not 2020, 2000, 2008, 2007. They had to stimulate things to get things back on track after those things. But I think markets are now used to it. I think it's affecting the real estate market now, because if people are locked into, 2 or 3% mortgages, why would you sell your house to buy another one at 6 or 7%? You're going to pay substantially more, twice as much in mortgages, than you would be at your current rates if you're locked in at one of those low interest rates. So, I mean, it's nuanced, and regardless, some people are going to be unhappy here. I think a pause is the right move personally, but it's subjective, and I think you could certainly argue a hike based off inflation. I don't know if inflation is high enough to argue a hike, though. The question is, and I've said this a lot before, but the question is, when does the Iran conflict end and we see stabilization in oil prices? That's the big question if you want to raise rates. If you do not think it's going to stabilize anytime soon, sure, you could certainly argue a hike, start to combat some of the oil, driven inflation. But even if we do resolve soon, it's going to take time to get back to the pre-conflict state of oil, regardless. So fireworks are not bad. I mean, they're not bad for me as a finance news channel. We raise rates today. It's gonna get some eyes. But I don't think we're going to. Yeah, it's around 6 or 7%, 7.5. What are the expectations on earnings? We'll talk about earnings later, but after the closing bell today, we do have big tech earnings. Microsoft, Meta, I believe QCOM as well as some other ones. So we do have big earnings. What if there's a surprise cut? It's not going to happen. There won't be. If there's a surprise cut, markets might celebrate. But again, it's really nuanced. And I know I say the word nuanced a lot, but this really is nuanced, because it's one of those situations where if we do a surprise cut, inflation fears are going to go up, right? They're going to say, hey, we're cutting rates with, 4 4%, 4.2% inflation and $85 a barrel oil. That's not good, right? So I don't think a cut is just an automatic like moon in markets, like an automatic run in markets. I think that one's more nuanced. I think a hike is an automatic dump, though. Personally, I think if we hike rates, we're coming down. Markets are gonna freak the hell out. So, but even if we don't hike rates, somebody says, is it going to be bearish? I think it could be. I think it depends on the tone. So if we pause today, I think we'll have an initial positive reaction. But it depends on what Warsh says during the press conference. The decision's at 2 p.m. in 23 minutes. The press conference is at 2:30. So, we might have a positive reaction to a pause in rates, especially in like gold and other rate-sensitive assets. But at that point in time, since that's the most probable thing, the attention's going to pivot to what Warsh has got to say. And so even if we pause today, if Warsh is hawkish, restrictive, doomy, markets are still going to come down most likely. 25 basis point raise today is better than to do it next month. Maybe. Markets are skittish, and firstly, I can't see a cut right now. And secondly, if there is one, market will sell off because it'll be scared. Right, for sure. Like when we cut like that, when it's super unlikely, markets immediately say, "Hey, something's breaking." So we're not going to cut rates today. I mean, that's not even a chance. Yeah, you could give me a bet for a rate cut too. I'll take the bet. Yeah. But wait a minute, guys. I told you guys I would quit vaping if we hike today. What do I get if we pause today? If I'm right, what do I get? All right? Like, I got to quit vaping if we hike today, and maybe it'll be a good thing. But what do I get if we pause today? If I'm right? It's an easy win for me, I think. So, start counting your checks. I don't want money. I'm just joking. But what do I get? New subs? I mean, we're going to get that anyway, bro. You get lung cancer.
Jesus. That went dark.
No, it's funny because I'll keep vaping, right? Yeah, bragging rights, okay. You gotta vape out of both sides of your mouth. I'll see, that one made me laugh. Shout out to whoever said that. Who said that? Dale, my guy. Thanks for the sub earlier, Dale. I appreciate it. I'm assuming you're the same Dale. I don't know how many Dales there can be. How about this? Y'all have to call me Supreme John. All right. I'm not going to respond. Remember this bet, right? Remember this bet. We paused today. I'm coming for that. Is that a deal?
I like Johnny Supreme better than Supreme John.
Okay, yeah, Johnny Supreme. I like it. Okay, that's fair. Pretty much zero chance Kevin hikes rates, but it's not just up to Kevin, though. Like, it's not just Kevin Warsh in there. It's a voting. It's a democracy in there.
You get a TikTok video of you losing a trade.
Yeah. No, 100%. Yeah. Hey now. Hey, there's another Dale, bro. Look at the Dales in here, dude. Shout out to the Dales. Darth John.
Dale Gribble in here.
Hey, shout out to Dale. Dale Earnhardt, the GOAT.
Yep.
Super sad story, by the way. I watched the documentary on Netflix. I think it was. Maybe it wasn't on Netflix. Super sad story, though. But yeah,
I think it is on Netflix, but I've never watched it.
It's good. Watch it. But yeah, again, regardless of what we do today, today's the biggest surprise in 30 years, according to Goldman Sachs, with interest rate futures pricing in 1/3 of a chance of a Fed hike today. Whatever they do today will be the largest surprise at a non-rate cut meeting since 1997. So we'll see. Gold's starting to bounce back up. I'm still in this trade, by the way, on gold here. I'm going to make you guys a deal. I will hold this through the FOMC decision. So for the next 20 minutes at least, I got to hold this. Lurking like a crocodile. Hey, you don't have to call me Supreme, Johnny Supreme right now. Only if I'm right. All right, only if I'm right. I think I saw it on Prime. Buy or sell, bro? I have no idea, dude. I think what you do in markets right now is going to depend on what your thesis is regarding this Fed meeting. If you think we're going to hike, I mean, obviously, short's the move. If you think we're going to pause, a short-term long trade maybe makes sense, but that one's less given because that's already the most probable outcome, right? If we hike, we're almost certainly going down. So if you really believe it in your heart that we're going to hike rates today, I'm not an investment professional. I'm not liable if you lose money. Don't copy me. But top 3 worst ever. But if we hike today, we're going down almost certainly. And so maybe you can get into some trades here. But
by the way, I just got to throw this out there. Johnny Supreme makes you sound like you're a gang leader in a Broadway play.
bro, I'm the leader of ping pong in my household, bro. I don't know if y'all know this, but like, you know, I play ping pong.
I bet Carol's a sleeper. I bet she could smoke you. She just hasn't like ever played ping pong in front of you, so you don't know. She's waiting for the right time until she really wants something, and then she's gonna bet you.
Oh no, her and I have played. You know, I love her, but she gets beat at ping pong. My daughter's my biggest competitor. You know, my daughter is Mr. Robotnik. You know, Dr. Robotnik. That's my daughter. She's pretty good, actually. You know, but yeah,
well, she's a good athlete. You know, so
she is. Yeah, she is. Are you long on gold? I am long on gold. Again, and I'm long on gold because I think if we come in as a pause, which I think is almost certain to happen, not almost certain. I keep saying that because that's usually what it is. I think a pause is very likely, much more likely than the odds are giving it. And so with that, I think if we do pause, at least initially, gold's going up a little bit, at least short term. I think when Warsh starts to speak, if he comes out hawkish, it might reverse back down, but just a short term trade. I don't mind going long in gold here. I'm already up hundreds and hundreds on the day, and I'm very good day. The last week I'm up like $3,000. And so, yeah, but we'll see what happens. It's just a small bet. If the pause will happen, the market will pump. Your certainty makes me think a hike is coming. I'm not certain. I'm certainly not certain. Don't you think a pause is already priced in? I think to a certain extent, I think it's less priced in than normal. You know, I think it's less priced in than it normally is. Generally speaking, again, I said this earlier, but generally speaking, ahead of rate decisions, there's a 98, 95, 96, 97% odds of whatever's going to happen is going to happen. Today, we do not have that type of weighting on one side. Okay, we have still 30+% chance that we raise rates today. And so because of that, it's certainly less priced in than a normal Fed meeting, which makes this decision, again, at 2 p.m. in 15 minutes, more interesting. What's up, Mr. Knight? Thank you for the subscribe, my friend. I appreciate it. But it definitely makes this one more interesting because generally speaking, like we already know we're going to pause, especially we haven't done anything with rates since December. So we haven't moved rates since December. We've been at the same rate since December. All of that weighting is going to come into play here, but I still think we're going to pause. And I think if we don't, obviously markets are falling. Is today the day? Yeah, the geopolitical environment's interesting. Again, does anybody in the chat right now think we are going to raise rates? Does anybody in the chat right now think we are going to raise rates? Again, if you do, let me know. I would like to hear your argument behind it. Not whether we should. I think that's a different question. Again, do you think we are going to raise rates today? Does anybody in the chat believe that? I mean, I still see 40% of the votes in the polls that think we're going to raise rates today. Again, what's your logic on that rate hike bet? All things considered. What's your logic? Like, is it high oil prices? Is it, you know, Kevin Warsh was less dovish than expected in the last meeting? All right, Brain Stew, you're spamming yes. What's your logic, brother? What's your logic? Let's hear it. No. Not today, but yeah, I think September, if we continue at the elevated oil prices, yes, I think September potentially. Dovish meeting? So you think we're going to hike with a dovish tone? No rate change, but we'll say inflation is its... Hey, thank you, Tariq. Appreciate it, brother. Thank you, sir. Lurkers vote yes. Yeah, it looks like the lurkers do vote yes. Gold is moving. Yeah, I'm green in gold. Hey, thank you, Flo, my guy. Thank you, bro. War? Conflict? Yeah, I mean, that's not a bad bet, but I think we're too early and we saw lower inflation data. I think if we didn't get lower CPI last time, we didn't get reduced prices of oil, then I think the hike odds would be higher this meeting. But I think because June we saw, you know, reduced oil prices leading to lower inflation readings, I think that's going to be the hill they stand on in terms of no hike today. I think that's going to be the hill they stand on in regards to a pause today, is just because we had lower inflation data. They're going to use that to say it's optimistic. Even if we're back up in oil prices now, I think that's going to be the roadblock to a hike, essentially. So. Marsh will dodge every question. Yeah, he dodged when he did the panel in Spain. My guy was dip, duck, dip, diving, and dodging. You know, outlook questions. That guy was outlook dodging in the panel he did. Guys, if there is a hike, gold will not look like this. Yeah, if there's a hike, don't get me wrong, gold's gonna... But that's a risk I'm willing to take here. That's a risk I'm willing to take. I think, again, I think we're weighted towards a pause, and I think gold reacts well to a pause. I'll put it this way. We have 13 minutes left. 13 minutes left. We're going to know pretty soon. We're going to absolutely know pretty soon here in terms of what this gold trade does. That's right, Faye. You know. Faye got the reference. Warsh is going to get fired if he hikes. Absolutely not. You know. Again, even if the president wanted to. He just got it. There's no freaking way. Yeah, I hear we're going to have maybe at least one dissenter. Maybe I'm hearing maybe Kashkari is going to be the dissenter wanting a rate hike when we pause. I think if we do pause, we're going to get some dissenters. And remember, last time we got the summary of economic projections, Warsh did not give a dot in the dot plot. But we did have that last time, which showed very high outlook for inflation and low outlook for GDP. But that happens every other meeting, so we're not getting a SCP. We're not getting a dot plot today. At this point, we just have to look forward to the statement, and we're going to see if the rate hike odds are justified today ahead of this meeting. We have 11 minutes left. Guys, 11 minutes. Some lottery plays. Go ahead, Britt. No, I was just going to say, somebody's asking about lottery plays. I'm not giving out lottery plays. But if you wanted to take a trade that has a high reward to risk, but low odds, I mean, a short in the market makes sense. A short in gold makes sense. And this is only if you think we're going to hike rates. But if you're probably going to lose on that trade, just to get me wrong. Like, shorting in regards to betting on a hike. You know, maybe you could argue even if we do pause, markets might not react well. They're somewhat priced in and we still drop a little bit even if we do pause. And I get it. But... yeah, it's just incredibly improbable that we are going to be, you know, dumping down like that from a rate hike, but it's possible. CME watch tool shows 70% odds of a pause. Okay, yeah. Yeah, I think it's going to continue to tighten up. And this is usually what happens in these FOMC decisions, but... yeah, the watch tool is down. It's not even showing on me. There's too much traffic going in and looking at this thing right now. The watch tool is down. So everybody's getting ready to look at this, dude. Everybody's watching this thing like a freaking hawk. Pun intended. Yep, I said it. Pause with dissent. Yeah, we might have some dissenters. Specifically, again, I'm hearing Kashkari maybe, but we might have some. But yeah, the site's broken. Okay, there he goes. Yeah, 70% chance of a pause right now. So we got a 70% chance of a pause. And I don't think we're going to get a surprise hike, but there's a chance. I'm in gold long right now. A little baby trade. Like, this trade doesn't really matter. We'll see how it goes. But this is going to be crazy. Yeah, it's a much more interesting thing, dude. It's so much more interesting right now. It's kind of exciting. Like, a lot of the time, the Fed meeting comes along, and at 2 p.m., it's like, all right, like, we already know we're going to pause rates. We've done it for the last 7 months. At this point in time, that got a little boring. Now at 2 p.m. in 9 minutes, there's some spiciness to the next 9 minutes. We might get a surprise hike, and if we do, markets are going to freaking dump. So I'm interested in it. Let's see what we get. If rate hike, we go down. Almost certainly. I think if we rate hike, we go down. Almost certainly. Not 100%, but I think if we raise rates... I mean, I don't know an argument in regards to rate hikes that would make the market go up. I just don't. I'm going to put it in sub-only mode now, guys. Thank you for the subs. We appreciate it. We're going to put it in sub-only mode. Hit the subscribe button.
Do it now.
Full margin. Go ahead, Britt.
No, I just told him to do it now.
Oh, yeah, do it now. That's right. Britt's right. Do it now. At this point in time, look at the odds on poly market. So the odds on poly market are showing roughly 80% chance of a pause right now. So you can see poly market showing 80% chance of a pause. 80% chance no change, less than 1% chance of a cut, 20% chance of a hike, less than 1% chance of a 50 basis point hike. Here's a different one. But yeah, this one's showing basically 80%. Yeah, so again, I think poly market and the odds makers there are a little bit more accurate in terms of odds that we raise rates. 20% chance I think is more reasonable. I don't give out likes for nothing. Yeah. If we were to raise rates, then how much would they need to go up? If we raise rates, it's not going to be 50. 50 would be genuinely like a potential market crash, I think, on 50 rate hike. That would be 0.5%. That's a lot. That's a lot to surprise with. If we raise rates today, it'll be a 25 basis point hike. But again, regardless of what we get today, it'll still be the largest surprise we've seen since 1997. Thank you, Matthew, for the subscribe, my friend. I appreciate it.
Thanks, bud.
Yeah, thank you, brother. All right, guys, 7 minutes left. 7 minutes, not 50. That'll be next month or in October. Yeah, if oil prices stay elevated here, you know.
See, I'm with Raymond because Raymond says 1,500 people watching, 300 likes for the goal. I'm with you, Raymond. We got a lot of people watching, but not a lot of people liking, so hit the like button.
And everybody loves Raymond. Here's your dad joke for the day. You're welcome. I'm going to give you that one for free, guys.
I love Raymond because he's pumping the channel.
Your mom gave me a like? Raymond, bro. Dude. Everybody likes you, Raymond. Why would you say that, bro? Everybody likes you, dude. Come on now. Hey, Lord, whatever your name is, thank you for the subscribe, my friend. I appreciate it. Yo, may I ask why a lot of people say sell gold? XAU is gold. We actually think we're going to get rate cuts? Of course not, dabbers. The dad joke was worthy of a like. That's right. I hate Raymond. Puppet boys, hey. It's freaking time here, guys. My gold trade is green. I'm risking it. My gold trade is green. I am up a whopping $10 on one micro contract of gold here. I want to see what happens, though. Again, I still think if we go up, I think if we pause rates, gold's ripping up. The risk, though, is that I'll take this trade for fun. I'm not going to lose money on the day, I don't think. But if we hike interest rates today, my trade is going to get beat up, dude. If we hike interest rates, it's going to look very brutal. Like, we are going to drop substantially, I think, in gold if we hike rates. Gold is incredibly rate sensitive. Why? Gold is rate sensitive because when yields, i.e. interest rates, are higher, less people buy gold, more people buy bonds because they're paying out higher yields. Less people buy non-yielding assets like gold and crypto and equities to a certain extent. So if we hike today, gold's going down. And remember, guys, the roadblock to a cut, the roadblock to a pause is inflation. And we're seeing that. You know, the Fed has a dual mandate. They want to keep stable labor market, low inflation, right? Lately, we've seen somewhat higher inflation, which is why the hike odds are so substantial here. But I still think we're going to pause today. Hey, thank you, Alexander. Thank you, my brother. Thank you. I appreciate it. Hey, thank you, LFX. Shout out to you, bro. Appreciate it. We've got 5 minutes here. 5 minutes. Manipulation to short, increasing interest rates. I'm trading tomorrow. I am long in gold. My thesis on gold is that we're most likely going to pause today. Markets are overestimating the likelihood of a hike, and if we do pause, that should be more dovish, i.e. bring yields down, push gold higher. That's my logic. Again, it's not easy logic because, and I have to have a stop set, because if we hike rates, gold's going to tumble. So is NASDAQ. So is everything else. Hey, thank you, Karen. Appreciate it. But here we go, guys. We got less than 5 minutes now. Here's Bitcoin. Bitcoin's starting to rise up a little bit as well. I think Bitcoin, maybe they understand the same thing that I do, which is that we're probably going to pause. By now, we're ripping up in 15 minutes. Bitcoin view. I'm not telling you guys any entries. I don't know what markets are going to do. I don't know. Bitcoin's heading up, though. It's up to over 64,000 ahead of this decision here. All right, guys. Here we go. 4 minutes exactly. 4 minutes. The timer's on. Our new Fed is more hawkish than Powell? No, I don't think so. Yeah, hit the live button next to the play button so you don't get lagged behind here, by the way, guys. Hey, thank you, Aggressive Edits, my guy. Thank you, brother. Oil prices right now ahead of this meeting are $84.50 a barrel, almost $85 a barrel right now. And again, at this point in time, odds of a hike. Let me refresh this. You know, so many people are looking at this ahead of the Fed decision. But here we go. I got it ready here, guys. So we got this ready. All right. All right, so we got the statement ready here. The last statement was noticeably shorter than previously. We got the statement ready here. Yeah, the hike odds are completely down. But here we go, guys. We'll put the NASDAQ up. I'm going to put gold up, obviously. I'll put my gold trade up, actually, because that's probably the right move. Here's gold. We'll put that up. We're watching the NASDAQ here. But, bull or bear, guys? Bull or bear? I'm sorry I asked this. I told you guys I wouldn't do it, but I'm doing it anyway. And again, my chat and I have a bet that I have to quit vaping if we raise rates today in 3 minutes. But we're here. Let's see what we get. Again, yields heading into this meeting are interesting too. But again, this will be the biggest surprise in 30 years, basically, according to Goldman Sachs, regardless of what we do today. But poly market has about 80% chance hike odds, or 80% chance pause odds, 20% chance hike odds. FOMC Watch Tool has about 30. But here we go. 2 minutes left, guys. 2 minutes left. And again, remember, the statement is going to matter here. The statement is going to matter. I think we're going to pause, but it depends on the weight of risks in the statement. Like what they say the biggest risks are in the statement is going to be a huge part of this as well. And remember, Warsh speaks at 2:30. 30 minutes from now, basically, 32 minutes. So we're going to look at the statement. We're going to dig through it. We have 2 minutes left. We're going to look at it, see what the weight of risks are in the statement, see the market reaction. But again, this is one of the most interesting Fed decisions we've had in a long time. Last time we moved interest rates was 6 months ago. 7 months ago. And so this is the first time we could potentially move interest rates in 6 months. It'll be the biggest surprise in 30 years regardless for a non-cut meeting. And yeah, we have a minute and a half left, guys. A minute and a half left. Here we go. It's time. It's time for the big decision here. Task Force Unite. Yeah, they got task forces for everything now with Warsh. But here we go, guys. We got about a minute left. About 1 minute here. Gold started to bounce back up here. I am getting a little priced into gold. I think maybe we'll have a positive reaction here. But here we go. 50 seconds basically right now. Again, 30% to 35% chance of a hike today. All right, guys, here we go. 40 seconds. Last minute predictions. Again, I'm long gold ahead of this meeting. I almost never hold things through big economic events, but I'll try. If they cut, Robinhood is going to crash. They're not cutting. If they hike, the market might crash. Maybe not crash, but... All right, here we go, guys. 25 seconds. 20. 15 seconds. Let's see what we do here, guys. It's time. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And here's the decision. Okay, guys. So, again, the FOMC committee approved the following statement. They decided to maintain the target range, so it's a pause. Economic activity is expanding at a solid pace. You're welcome. Here, you're welcome. I'm going to cut this trade right now. I'm out. The Federal Open Market Committee approved the following statement. It is a pause. Guys, look at gold rip. It is a pause. The committee decided to maintain the target range for the federal funds rate at 3.5% to 3.25%. Look how much smaller the statement is. In support of the Federal Reserve's dual mandate, the committee is continuing its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity, growth, and capital investments are strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy specifically. The committee will deliver price stability. That's it. That's all it says. And look, exactly what I said. Gold shoots up on a pause. Markets overpricing in rate hike odds. Markets always do that. If you can find a discrepancy in markets, markets are overpricing in the rate hike odds. Again, too many people priced in rate hikes. Too many people thought we would get rate hikes. The biggest chance was that we would get a pause. Yes. You love to see it. You love to see it. All right, guys, you got to call me Supreme Johnny from now on.
It was Johnny Supreme. Get it right.
Oh yeah, Johnny Supreme. Okay, that's right. But yeah, look at this. Gold popping up. Look at it. Look at what I said. Bitcoin, NASDAQ heading up as well here. And again, this is one of the decisions in which I thought we would move a little bit more than normal FOMC decisions. You know, the odds were a little bit more back and forth here with this decision. And so look at the NASDAQ rise. And yeah, we'll see what happens. But again, now we have the Kevin Warsh speech. 2:30. Yeah. Hey, thank you for the sub, my friend. Thank you, my brother. But yeah, look at the NASDAQ going up. NASDAQ at 27,876. Hey, thank you, Toe. Appreciate the love. But yeah, there's the NASDAQ going up. There's gold going up. Trade idea worked cleanly here, so that's nice. And again, stick around, guys, because we do have the Warsh speech that we are going to be streaming the entire thing completely live. NASDAQ is heading up. Big tech earnings after this as well. But we do have the Kevin Warsh speech at 2:30 p.m. Eastern Standard Time. And again, look at how small the statement is. Just to put this into perspective. Like, look, this is a very small statement. A very small statement. If we go back and we look at the previous statements here, I mean, the previous one was pretty small as well. But look at, like, before Warsh. Look at how long that statement is. All right, look at the current statement. Yeah. I don't know, it's not showing up now. But look at the current statement, much smaller. Much smaller. So, again, we paused interest rates. NASDAQ ripped up. Gold ripped up. Now, since we paused rates, the attention is going to pivot to what Warsh says during the actual press conference here. So, everything's going to depend on Warsh's tone now. Again, everything's going to depend on Warsh's tone. The Fed did pause interest rates. Short statement is hawkish. I don't think it was hawkish at all. I think it did say the labor market was okay. It did say inflation risks were there. But I think it was pretty neutral here, all things considered. I don't think this was like a super hawkish statement or anything like that. I mean, we could look. It did reference labor market being okay, labor market stability, and inflation. So don't get me wrong. It's not necessarily like a dovish statement. But I don't think it was super hawkish. What did you guys think? Did you guys think it was hawkish or dovish? And you can see yields start to fall here. Like here's 2-year Treasury yields. They're dropping. But to me, it seemed relatively neutral here, no? Right, this is pretty neutral, no? I mean, look at how short this thing was, though. Again, it said they paused economic activity expanding, Middle Eastern stuff, productivity, capital investment are strong, job gains have kept pace, inflation remains elevated, supply shocks. Yeah, I mean, I don't think we could come out super dovish in the statement either. But, again, look at gold here. Gold did rip up, rate sensitive. Now the attention's going to pivot to what Kevin Warsh has got to say during the actual press conference here. And we'll put a timer up for that at the bottom right now. Again, I'm going to do a poll for the chat now, since we did this already. Yeah, but we're going to do a poll right now, since we did this already. And we asked if we're going to hike rates. Will Kevin Warsh have a hawkish or dovish tone is going to be the question. Yeah. I think he's going to be neutral, but slightly hawkish. But I'll put neutral in there as an option as well. Will Kevin Warsh have a hawkish or dovish tone today? And what's the move, right? Do you want to buy or sell gold here? Is the question. Like, buy or sell gold, what's the move? But gold's trying to hold here. Like, we're trying to hold. Again, I got in that trade. That trade idea worked great. But
I knew you could do it, John.
I know, listen. I'm just going to put it out there. What does hawkish mean? Is hawkish bad? Hawkish means restrictive monetary policy. What do I mean by restrictive? I mean, hawkish means inflation fearing, higher interest rate sentiment. So you get higher interest rate sentiment when the economy does well and inflation is a risk, right? More risky. Essentially, it's when inflation is more risky than weak labor. if weak labor is more risky, then we cut interest rates and we have lower yields and we have more dovish, what's called dovish, or like looser monetary policy, like reducing interest rates, stimulating the economy. With hawkish interest rates, it's more restrictive. It means we might potentially raise rates. It's higher interest rate sentiment because of more pronounced inflation risks, is what it means. But yeah, buy gold. Honestly, the gold spammers usually say buy or sell gold. Today, I actually bought gold, and we made some money on that trade with one micro contract. You'll love to see it. Yeah, I mean, I think we're going to raise rates maybe next meeting if the inflationary aspects of high oil prices continue. I think we are going to have potentially neutral to hawkish tone by Kevin. And I think this is mostly wide agreed upon by economists. I think most economists agree with this, where with Paul's rates today, Kevin Walsh will be, hawkish or neutral. I think neutral is a good chance, but hawkish as well. He doesn't like to give out forward guidance. So I think we'll have hawkish / neutral Walsh. And I told you guys before this, obviously, I thought we were going to pause interest rates. Congratulations, John. My name's not John. Remember, that's not my name anymore, guys.
What's your name?
You know my name. You guys know it. We had a deal.
Johnny Supreme.
We had a deal. That's right. I don't know who John is. If it's just oil pushing inflation, raising rates is not necessary. Yeah, and I think we talked about this a lot before. Raising rates might not do much to combat oil prices anyway. And so, I think the Fed understands this. I don't care what I bought, Mike. Hey, later, Ledger. Johnny? Yeah, that's right. You guys know. 10-year yields and dollar index charts were hinted towards this current move prior to the decision. Yeah, I mean, look, I saw gold start to move up. The reason I got this trade idea is because I saw gold start to climb a little bit, and I understood what they were doing, right? They were look, smart people are going to understand that we were probably going to pause today, regardless of what the odds were for a rate hike. Like, people that understand are going to realize we're probably pausing rates today, right? So that creates a discrepancy where smart traders can capitalize on that discrepancy and say, hey, we're probably going to pause. Markets are overestimating hike chances. What does that mean? That means when we do pause, it might shock the markets a little bit more, and gold, a non-yielding asset that's going to go up when yields go down from pausing, might rip up when they announced it. And with that, that's why I took the long in gold, and that's what gold did. Gold went up. This is how you come up with trade ideas, guys. Because again, if you can find discrepancies in odds, and I think the odds makers like Polymarket getting so big now, that'll be a lot of money that people can potentially make in those markets. Yeah, we paused interest rates as expected. Yeah. Hey, Steve, September could be a hike. Yeah, I think we could get a hike in September for sure. We could definitely get a hike in September. I don't know if we're going to. We'll have to wait and see, but we could. So it's definitely a chance. If oil continues to stay elevated up here, there's definitely a chance we hike rates in September. And again, if we look at the odds for September now that we paused interest rates, right? Like, we could go to the odds now. If it'll pull up here, the page is still down from everybody basically betting on all this stuff. But beginner precious metal trading coming soon. Hey, Max knows. We had a bet, guys. We had a bet. That's all I'm saying. All right. We also have Amazon. Yeah, Amazon doesn't report today. No, it's Meta and Microsoft after the closing bell today. Yeah, the Fed watch tool is down for me still. I'm trying to look at September odds, but it's still down. NASDAQ still climbing up here after this report here. So again, the Fed paused. The statement was very short. The statement did stress economy strong, inflation's risky. So you could argue it's a hawkish statement. Markets are still interpreting it as a positive thing. Again, I think markets overestimated the hike odds today. The updated dot plot is coming next meeting, not this meeting. So that's coming in September. All right, so the page finally loaded up here. At this point in time, there is, as of now, a 75% chance that we're going to raise rates 25 basis points as of September. So right now, markets are pricing in roughly a 75% chance that we'll get rate hikes in September, a rate hike in September. The statement's not necessarily super hawkish, but it's pretty short. it did stress inflation risks. It did stress like good labor market. And so when you got a good labor market, inflation's high, you could argue that's hawkish, inflationary. So do we get a hike next meeting, guys? We did a poll. We asked people what tone will Kevin Warsh have. 40% think he's going to have a neutral tone. 23% think dovish. 37% think hawkish tone for Kevin Warsh today. So there's still a good chance that that he's going to be neutral, and I agree. Yeah, I'm looking at September. Still showing 74% likelihood. Should I have held the gold trade? I got out pretty quickly because exactly what I wanted to have it happen. But we're at 41.40s here in gold right now. Fed buying debt again. I don't see anything about the Fed. I mean, I see the Fed, like I see in this, they talked about quantitative easing. The committee is continuing its policy of maintaining ample reserves in the federal in the banking system. This seems like they're just keeping their balance sheet the same size, though, to me. A continuing policy of maintaining ample reserves, maintaining the keyword, right? That means I don't think they're expanding the balance sheet. I think they're probably maintaining it the same size, and that's what I hear when I read this. I don't think this is QE in regards to this statement where they said committee is continuing its policy of maintaining ample reserves in the banking system. I think that is just maintaining keyword there. They're not expanding balance sheet. They're maintaining it, which means they're keeping it the same size. Is what it seems like to me. But again, you could argue with it. Gold's still heading up, though. It hit 41.50s earlier, basically, on this move. And again, guys, stick around. In 15 minutes, Kevin Warsh does his press conference. In 15 minutes.
Based on the last time he spoke, it'll be shorter than the wait.
Yeah. Yeah, I think he's going to be neutral. I think neutral makes the most sense. At 10K to buy MU shorts. Yeah, I think neutral makes a lot of sense. But I think he might have a small hint of hawkishness in his tone. Again, a small hint. I think if we pause rates today, we might have even dissenters. But yeah, we did have some dissenters, actually, now that I look at it. We had 3 dissenters. We had Hammock. We had Neil Kashkari, like I said earlier, and we have Logan, who all dissented in preference to a rate hike, 25 basis point rate hike. So we did have some dissenters here. We had 3. Lori Logan, Beth Hammock, Neil Kashkari dissenting.
Yeah,
perhaps a task force will speak today instead. Maybe we'll get a task force. I don't know. But
they can dissent in one hand and you know what in the other. Which one fills up first?
I never got an alert that you were live, John. Oh, I'm sorry to hear that, Native. But yeah, we are live today, sir. We got 2,000 people still here. We got the press conference in 15 minutes. Again, are y'all bullish or bearish on the press conference? I know I asked this question a lot, but bull or bear on the press conference, my friends? What do you guys think? Bull or bear? Let me know in chat right now. Bear. Yeah, I capitalized on that candle, that moon candle. Yeah. Hey, my guy. Thank you for the donation, my friend. Shout out to Mag here. Thank you for the donation, bro. Thanks for the likes, guys. Hey, thank you. I can't talk right now. I keep mispronouncing words. Maybe that's why people thought I had a lisp. Bear. Almost all bears. We got some bulls in here. Like I said, my thesis prior to this rate decision, if you guys remember, is that we would pause. That would shock some of the hawkish people. We would originally go up, and then Kevin Warsh would come out slightly hawkish, and then we might reverse a little bit, depending on how hawkish he is. Right? Like, that was what I thought would happen leading up to this. But we'll see. We'll see. Again, do we have any tie predictions here? Like, what color will Warsh's tie be? Do we have any tie predictions? Let me know. Bear will melt bull. Yellow tie? The audacity of that. I don't think so. Definitely not red. Red would be a little bit too scary. I'm going to go with blue. Yeah, I'm going to go with blue. I'm going to go with like navy blue. Like dark blue. Yeah. I'm going to go with blue.
Not going, Chip. John has just had a lot to say.
Yeah. A bow tie? Dude, a bow tie would be freaking crazy. But I'd support him with a bow tie, you know. Maroon, green tie with a money pattern. If he comes out with a green tie with a money pattern, we're in the movie Idiocracy. You know.
Might be anyway.
Yeah, I think we are anyway. Crocs are big now, you know.
Yeah.
Hey, what's up, Sam? Lavender. Orange husk. Orange peel.
Hey, Sam.
Red. Market would crash if he comes out with a bow tie. Hey, I'd support it, though. I would almost respect him if he did. You know? If he had the balls to come out there with a bow tie, you know, I'd gain some respect.
Like a regular one or one of those ones that spins?
Oh, suspenders would just take it over the top. Oh, a spinning one, dude. Oof. You know?
There you go, Max.
Yeah. Rates remain the same. Are you stressing out over the interest rate, or are you going to wait until the next FOMC meeting to stress out? The stress came and went. Guys, we longed gold ahead of this FOMC meeting. Why? Because it's super likely that we were going to... I think markets overestimated the hawkish odds for a rate hike. I said this all morning. I said it today. Again, it makes sense. If we didn't have lower CPI last meeting, or last report, then I think we maybe would hike rates. Like if we saw inflation continuing to go up, then we might have been a little bit more weighted on the hawk side. But I think because inflation went down, it slowed down, I should say. In the last CPI report, it came in at 3.5. Previously, it was 4.2. Oil decreased in the previous month in June. I think because of all of that, that was the roadblock to a hike today. And so because of that, I thought markets were overestimating a rate hike, and we ended up pausing and gold ripped up. We'll see if it reverses on Marsh's tone. It certainly could. It was as expected, but there was still a 30+% chance that we would, hike rates. So, yeah. All right, so again, I'm reading that the Fed's decision to hold rates steady has clouded the outlook for a September move and beyond, with traders now pushing expectations for a quarter-point hike towards October and losing confidence in 2 hikes by March of next year. So, yeah, we're still watching gold. He'll wear black leather. Nah. I'm not going to the beach for another few weeks. Yeah, just again, so we had 3 dissenters. Pawn sent me this. If it passed by only 1 vote, Warsh could have been that 1 vote to keep it. So, yeah, we're still kind of split in the Fed in terms of what people want. We've got a decent amount of doves and a decent amount of hawks, and they're kind of split, but 3 out of 7. So Warsh could have been the 1 vote to keep it. The VIX is dropping. Well, yeah, that's because markets are heading up right now. The VIX is going to go down when markets go up and go up when markets go down. Markets are stress monsters. Market makers and institutional investors must drink a lot of Pepto-Bismol. Hey, thank you, Eric, for the sub, my friend. Thank you, brother. What are we at in subs? We're almost to 75,000. Or 175,000. Where are we at right now?
How close are we?
We need less than 200 subs to break 175K. Less than 200.
So I'm sure it won't happen, but I believe there are enough people in here to get us to 175,000.
Oh, I believe there is. We got 2,000 people here. Somebody said, is there a chance for the press conference to make a big impact? Yes. Most of the time, the press conference is the bigger impact than the actual rate decision. So most of the time, we basically already know what we're going to get prior to the press conference, or prior to the rate decision. So most of the time, it's like 95, 98, 99% likely that we're going to do whatever is the one that we're most weighted to. Today, it was 70%, less than 70% at some point. So it didn't get tighter. It didn't get more weighted like we thought it would and like we have historically, right? So this is one of those decisions in which move markets a little bit more than normal. But the press conference, I still think, is going to be the most influential thing. Since pauses were still the majority likelihood, I think the I still think the press conference is going to move markets by a big degree. So, again, let's wait. Let's wait. And let's see what we get here. I'll put the stream up so we can kind of wait and see. But, yeah. Yeah, so again, we're waiting here for the Fed. I'm going to get the stream ready for this here. We got 9 minutes. We'll see what Wash has got to say. I'm going to get the scanner out the way here. And I'll put gold and maybe the NASDAQ and Bitcoin up here. But again, let me know if you're bullish or bearish on this. I don't know what we're going to get here today, to be honest. Sorry, forgive me, guys. I got to get this straight. All right.
Who in the chat thinks he's going to be as brief and succinct as he has been? Just out of curiosity. Think he'll talk more today?
I don't know, man. We'll see if he dodges some of the Outlook. I think he's going to dodge Outlook. Don't get me wrong. But,
Probably.
It depends on, like, it's a big if in terms of what he does there. Alright, that's pretty good, I think, huh? Still waiting. We have, what, 7 minutes left until this report. I'm going to put the NASDAQ up here, I think. Here's the NQ. So, NASDAQ coming back down, though. So, we originally went up. And as we've gotten closer to this meeting, markets might be going down some here. This can't be good. That was barely a pop. There's so much damage in the market. Yeah, I mean, look. Markets understand the attention's now going to pivot to what Warsh has got to say. So markets understand, like, Warsh is going to take front and center here. Like, what Warsh has got to say is going to take front and center.
Yeah. Hey, big up to you, Sam. You know, sounds great.
I have to put myself in the corner here really small. Wash out? Hey, we'll see. MU keeps crashing for no reason. I mean, it's not no reason. MU and memory stocks are down from China getting involved with lithography machines, which produce memory chips. And so that just means more memory competition. That's why memory has reacted so negatively over the last little bit. Sorry, I'm trying to get this just right. I think that's pretty good right here. But still waiting here, guys. We got 5 minutes left. 5 minutes. %. MU keeps crashing. Major drop for the major drop incoming sun. Prepare. Hey, memory's not even close to running. No, memory's running down. It's running away. Task force, task force. How many times will we say task force?
I'm going to say 7.
What's with gold now? I mean, look, I told you guys I thought gold would pop up originally during the actual decision and then maybe come back down leading into the press conference. Press conference is in 5 minutes. But I told you guys that's probably what we were going to get today. Probably. So, we'll see. But I told you guys that's probably what we're going to get today for the FOMC decision.
Well, then it sounds like you were probably right.
Probably I was right, I think, you know.
Probably you're right 60% of the time.
I mean, 60% of the time, I'm right every time, bro. Yeah. I mean, you get that right, Brent. I'm going to see which stream is better here.
I inversed the quote on purpose.
Yeah, it's all right. There's the NASDAQ.
I guess inverted would be proper. I don't know.
All right, let's see. We're waiting here. As we get closer, I'm going to mute the mic and prepare for this. Yeah, the time to buy gold was before the decision. Yeah, no, 100%. I think gold, again, there was a discrepancy there. And understand, like, discrepancies in outlook and odds are some of the most profitable trades you can get involved with if you can predict and identify the discrepancy. As long as you have a stop loss too, like I got in gold, right? But I had a stop loss, which means that if we turn the other way, like we were still going to be all right. Like we would have lost, sure, but it's not going to, like if we crashed from a rate hike, which is probably what we would have done if we did get a rate hike, then we would have still been somewhat protected. Tie color is red. I think they try to stray from red or green ties. Just looking at it honestly, I think they kind of stray away from red or green ties.
Did Britt just insult our supreme leader, John? Honestly, Stoic, I'm not sure. The syntax confused me, honestly. So I don't know. Maybe I did.
He might have, dude. He might have. Get on him, Chad. I expect you. You know, I got shooters out here. Stop, profit, take loss. Yes, sir. Green tie would be nice. Yeah, he's not going to do green or red, though. I think it's going to be navy blue. All right, but here we go.
Also, just let me know when you're about to mute me so I can get all the terrible stuff I want to say out of my system.
Yeah, I'll mute you in about a minute, Britt. About 1 minute.
All right.
Because nobody needs you. Everybody hates Britt. Is he permitted to wear a bow tie? I don't know. I would respect it if he did, though. What's up, Keegan?
What if he wears no tie?
That's a bold choice.
See if it pays off for him, Cotton.
Yeah. Let's see. Here we go. I know he's my friend. That's why I can mess with him. He's my real friend. Like,
yeah.
You know, that means I can mess with him.
One of the privileges of friendship.
Blaze. All right, guys. Here we go. All right, guys. Here we go. NASDAQ is sitting right around the volume weighted average price, 27,740s. All right, Britt, I'm going to boot you now. We're getting pretty close.
All right. Talk to you guys later.
See you, bro. All right, chat. Yeah, everybody's waiting for the tone of his speech, right? Some buzzwords for the speech is supposed to start in 45 seconds. Buzzwords from the speech. Inflation. Rate hike, obviously. Outlook, base case. I don't think he's going to give much outlook, but inflation, labor market, rate hike, outlook. Those are the buzzwords. Quantitative easing, balance sheet. You want to listen to what he's got to say about the balance sheet. I'm sure he's going to get questions, maybe potentially about it. But task force, yeah, he's probably going to say task force a lot. But here we go, guys. 45 seconds. Let me turn the music off. I have two of these windows up here. We'll see which one starts first, and I'll give you guys the most up-to-date one. I'm also going to make sure the volume is really good here, so we're going to turn the volume up. All right, here we go. All right, here we go. There he is.
Good day. My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. the economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Let's start with Steve.
Thank you for taking our questions, Mr. Chairman. Sure. You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me, what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so
Sorry.
I'm sorry, it's your question. So interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw we saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much. Not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data, which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. Suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate. Inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction, or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Colby. Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made to the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we've made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Temeros of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us. They weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast, we don't want your dot, we just want your reaction function, part of me hears what we really want is your forecast, and what we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, we're in crisis mode. We were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all of that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Paul Weissman. Thank you. It's coming. There's a mic coming.
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give two answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more, but to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Mike McKee.
Michael McKee from Bloomberg Radio and Television. I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So, believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty? So the decision we'd made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it. But I would tell you that this discussion was far more robust and our thinking about how best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, I won't let you, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks. But we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. The chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses: impatience. Deliver it already. This is not an excuse. This is a fact. This FOMC, this board, has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information. Not a determinative source, not a perfect source, but if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys, but if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi there, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the way in which the Fed does policy, a keenness and open-mindedness and curiosity about that, so we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
All right, guys, so that is the end of the FOMC press conference today. He didn't say a lot. Let's just be honest here. He did not say a lot. He said he wasn't going to give out forward guidance. Still got a lot of questions behind it. Still got a lot of questions regarding rate hikes. and why we did not get them. But again, I don't know. I kind of agree with the pause decision here. I think we have risks to both sides, but if the conflict drags on, I think we maybe should raise rates next meeting. I think if oil prices stay elevated, I think we should maybe raise rates next meeting. Markets originally went up from the pause decision, and now they're starting to reverse back down. Honestly, the NASDAQ kind of looks like a short. But remember, guys, like, listen, we got big tech earnings in 45 minutes here. So we got big tech in 45 minutes. The chat, by the way, is hilarious. Hilarious. Some of the stuff I agree with, some of the stuff I don't, but I just want to put it out there. Y'all are freaking hilarious. So hey, all good. Idri, hey, thank you for watching here. Again, we got big tech earnings in 45 minutes. I think I'm just going to keep the stream rolling and just leave it live for that. Also, by the way, guys, I'm just going to throw this out here. We need 150 subscribers to break 175,000. And so, look, I'm not saying there's 2,000 people watching right now, but there is, okay? And listen, we cover all the Fed meetings. I told you guys before the Fed meeting what I thought would happen, and that played out perfectly. So if you want somebody that covers all of this stuff, subscribe, hit the notification bell. We appreciate it. Yeah, we're going to keep it rolling here and keep on streaming until the big tech earnings that release in like 40 minutes here. We might get into some trades. We're up a lot on the day. What are we up on the day right now? We are up right now $700+ on the day. So you love to see it. Here's the NASDAQ right here. But we are up $700 on the day. And again, this is leading into big tech earnings in 45 minutes. So we got big tech coming live in 45 minutes. We've had negative reactions to tech earnings. Specifically, we have Microsoft, which is green on the day, and Meta, which is flat on the day. So Microsoft and Meta earnings dropping in 45 minutes. We'll put a timer up on screen. But yeah, that is the Fomc press conference today. And we'll see what we get here. We'll see what we get. But we got some time. And dollar is getting weaker. Is it? Yeah, I mean, the dollar is going to go down as yields go down. And if this is interpreted as a dovish thing, the dollar index is going to fall, right, on less guaranteed rate hikes is essentially what this is. In terms of schedule for these earnings reports, Microsoft reports at 4:10, Meta at 4 o'clock. So Meta reports first. We also have Robinhood, QCOM, and more. So, yeah, we got big tech earnings. Let me schedule the stream. Yeah, so maybe we'll get a CapEx shock. I think CapEx is the biggest story to watch into these earnings. So let's see what we get here. But yeah, we did have the FOMC decision. Microsoft and Meta. Meta came out recently and said that they are selling excess AI capacity. So I think that's some of the big stories. We also got Robinhood in the books here. So we do have Robinhood and QCOM and some other stuff dropping right at the closing bell today, which again is in freaking 40 minutes here. 40 minutes. But stick around here, guys, because these could move markets more than the Fed meeting if they come in bad. Again, bear with me. I'm just getting this scheduled. Microsoft earnings. All right, we are here. But yeah, again, the dollar index has fallen down. Microsoft's right here. We'll take a look at the numbers in just a second. Let me call Britt back here. But again, did y'all think this was hawkish or dovish, bullish or bearish? Let me know in chat right now. I think the market really interpreted this as mostly dovish, honestly. We reversed a little bit at the end with some of those questions, but the market mostly interpreted this as dovish. But look at Microsoft coming down here. We'll put a timer up. Let's get a timer rolling here. Let me call Britt real quick right now. But the NASDAQ gold, man, look at gold here, bro. Like, my gold trade worked out really, really well. But look at gold here. So gold had one of the best reactions to this meeting. It's starting to turn back down a little bit now. But But yeah, we're starting to kind of try to get back up there. Let's see what happens. Again, let's get another poll here. We're gonna do another poll right now. I feel hawkish and then dovish. Yeah, like let's get another poll. Another poll out. Bull or bear on Microsoft and Meta earnings. That's going to be the poll. Let me know. Again, a lot of fears are into these earnings reports because we've had companies report pretty good numbers and still drop substantially here leading into this. Hey, Britt, what's up, dude? How you doing, bro? Okay, the chat can't hear you. Let me turn the volume down. I think I turned the volume up a little bit. All right, speak, Britt. How's the audio, guys?
Testing. 1, 2. 1,
Might
2,
need to-
3.
I might need to turn you up just a little bit so you can compete with me. All right, there we go. I think that's good. All right, Britt is here.
Okay, you
for
probably
sure.
need a handicap anyway.
Yeah, I mean, look, my voice probably should be a little bit lower. Also, guys, if you want to help support the channel, check out Apex. Apex's big sale ends tonight. A great way to help support the channel. Apex right now has $59 100,000 evals. No activation fee, $59. It's a great way to help support the channel. If you appreciate all our live content, you can help support us. But you can get 5 accounts for $17 each, $85 total if you get the 25K intraday. If you want an if you want a no activation fee account, again, this 100K one is $59 if you use coupon code BGT at checkout. It's a great way to help support the channel. It helps keep our content free, and we appreciate it. And yeah, heading into these big tech earnings, let's see what we get. But here's the numbers right here, or here's the link right there. It is an affiliate link. I'll pin it to the top of the chat. But if you want to help support the channel, you can use my code. It's a great way to help support us. Am I too loud? I mean, I'm as loud as I always am. I think Warsh was a little quiet. No, he seemed a little quiet to me. But look at gold. I'm almost tempted to buy gold here. But let's see. Yeah, but heading into big tech, Warsh just spoke. And there we go. We got the new stream up and running. Oil spiking up. Is it really? I saw some news come out in the wake of all this stuff going on here. Oil's, I mean, it is jumping up short term. Not a huge amount though, but it's jumping up a little bit at least. I said the president on Iran briefed on Egypt incident will hit Iran hard. It's our turn, end quote. That is what's doing this. So again, the president just spoke. He said on Iran briefed on Egypt incident will hit Iran hard. It's our turn to, end quote. Yeah, so it does look like a catalyst driven candle here.
Right on time, huh?
Yeah, dude, right on time. And again, we'll see what happens here, but markets are very interesting right now. Again, we've had a lot of tech earnings, specifically Google, Tesla, and more that had pretty decent numbers. Tesla numbers weren't actually good, but Google's numbers are pretty good. They still negatively reacted on higher capex here, and so the stories, the story's capex, you know. What's your take on SanDisk currently? I think memory plays have been really elevated here. SanDisk is still starting to turn. MU starting to turn back down as well. MU's testing that 755 low from this morning. And so one of the biggest things that's dragging markets down over the last few days is memory. Memory has been absolutely dumping here. SanDisk has fallen 60% basically right now. I think MU has fallen like 40% or 30% or something crazy like that. So memory plays, this is after China debuted their CXMT. What was the symbol? I can't remember the exact number, the symbol for it, but they debuted it and they're getting into lithography machines, which produce chips, right? So people are worried about Chinese competition in that regard. And that is what's been causing MU and others to fall down. I mean, these were incredibly elevated over the last year regarding memory plays. But it's still like a story you probably want to pay attention to just because memory is still breaking down leading into these earnings reports. And these earnings reports are major here. We have Apple and Amazon tomorrow and Meta and Microsoft today. So, yeah. Meta platforms, it reports at 4 o'clock. Conference calls at 5. EPS expected at $5.80 to $6, up 5.16 year over year. Revenues expected to 45 to 46 billion for, actually no, Meta revenue. I'm sure Meta is expecting about 60 billion estimates. So again, the CapEx guidance for Meta is going to be key here. If they raise CapEx, markets might really start to get nervous here. But CapEx guidance was 95 to 105 billion for 2026. But yeah, the CapEx story with Meta is going to be key. Microsoft expecting $87.44 billion in revenue. Let me make sure these are right. But what are y'all showing the expectations are for these? Not you, Britt, but let's see.
No.
Man, that rally sucked. Yeah, I mean, memory started to turn down here as part of what this is, right? So memory has started to fall back some. It's kind of dragging markets down. So that's what this is. It's just memory starting to dump. Get some music playing here again. Yeah, consensus EPS is about 421 for Microsoft. Revenue at 87.44 billion. Meta's expected at 710. Revenue of about 60 billion expected. So the bar is much higher here. Robinhood, QCOM, ARM, also another tech company reporting at the closing bell. Meta reports 4 o'clock. Microsoft reports at 4:10 is what I'm showing here. So we'll get Meta at 4 o'clock, right at the closing bell. Robinhood reports at 4:05. QCOM also reports at 4. ARM is at 4:05 is what we're seeing here. Like, I'll show you the earnings whisper data that I'm looking at. But Microsoft at 421. Meta is at 4. 710 expected for Meta. The whisper data is typically a little bit higher, but generally speaking, companies right now in this current climate need to beat and raise. Again, CapEx is going to be a big fear. Operating margin is going to be a big fear. Yeah, I got a timer I'm putting up. Yeah, I put the timer up. Yeah, look, the big story. Which one are you guys looking forward to more, Microsoft or Meta? Microsoft is kind of a proxy for software right now as well. So, like, software fears are still here with the SaaS apocalypse. Yeah, here's the timer. We'll put that up on the bottom of the screen. We only got 30 minutes left. But look at Microsoft. I see people say Microsoft, screw Meta. Meta, 100% just can't be wrong. Spy some strong companies for the environment. CapEx. Meta can go up or down the most based on earnings and guidance. Yeah, implied volatility is the most. But I think Microsoft's been volatile as well lately. The thing about Meta, again, Meta put out a statement 3 weeks ago that said that they were selling excess AI capacity. When they did, markets pummeled down and really dumped here on that. So it's one of those situations in which, like, yeah, selling excess AI capacity made a lot of people nervous about a pullback in AI, and we did pull back in AI when it happened. But, yeah. Okay, so the president did talk about Warsh. President says Fed Chair Warsh is brilliant. Warsh has a board, and it is a political one. Warsh would love to see lower interest rates, end quote. So he's basically blaming, you know, president wants cuts. I think the last part of the FOMC was a little bit more. I think the last part of the FOMC was a little bit more hawkish, and so that's why we see markets start to pull back some. The president also started speaking as well. But tonight is the biggest test of AI CapEx for sure with these earnings, right? Microsoft and Meta both report around 4 p.m. For Microsoft, there's 3 things, which is the Azure growth rate. It needs to be 30% or more growth, or they might be going down. The growth story could crack in that regard. CapEx guidance needs to stay near 80 billion, or they might get like the Google treatment in this way, where Google raised CapEx and dumped. So if Microsoft raises CapEx, they might drop. Again, 80 billion is what it is. Copilot enterprise metrics need to show that monetization is working for Microsoft Copilot. And that's Microsoft. Again, Microsoft, 3 stories. Azure growth, it needs to be 30% or more, or people are going to have growth fears. Number 2 is CapEx, right? CapEx is 80 billion for Microsoft. If it comes in higher than that, if they raise CapEx again, we might see what we saw with Google last week. Here's Google. You can see the negative reaction we got to the raise CapEx to 205 billion for Google, and you can kind of see these drops. Like, here's the drops in Google earnings here. We are now here, right? So Google negatively reacted on CapEx fears, and I think that's the big story right now, all things considered, is CapEx. I think that's the biggest story for everything. For Meta, CapEx is even more important. Right? So CapEx is capital expenditures, how much money they're basically spending on AI and whether it's justified is the worry. People are worried about AI overvaluations, and high CapEx might mean more spending, which might stoke some of that fear. But for Meta, again, 2026 CapEx guidance is the number. If they guide for $100+ billion, again, it could be another repeat of what happened to Google, which is raise CapEx, dump. And so revenue growth does need to exceed 18+% to justify their spending as well. In reality, Labs losses cannot widen materially. But again, the bar is high. Microsoft needs $4.21 EPS and 87+ billion in revenue. Meta needs $7.10 EPS and 60+ billion in revenue. Again, these are a little bit stretched because these are the earnings whispers, so they're a little bit higher generally. But yeah, they need to demonstrate that CapEx consensus alone. You know, they need to show discipline in CapEx. That's what they need to show. So, again, we got a lot of big names, not just these two, but these are the two most important ones after the closing bell. We don't have Intel at the close. We have Microsoft, Meta, Robinhood, QCOM, ARM, Chipotle, Fortinet, Starbucks, Carvana, MGM, Sprouts, FICO, Equinox, VKTX, and more at the closing bell, but no Intel. But yeah, look at Meta here. Meta's still falling here. I think markets might be nervous about more CapEx here, so we're starting to see tech fall. So we'll see. We're at 588. So y'all bull or bear? Let me see the poll here. We did a poll. 55% are bullish. 45% are bearish here. 55%. So mostly bulls, but I'm a little worried about CapEx and spending here, to be honest. Again, we've seen tech earnings post good numbers. Google had great numbers aside from CapEx, but still fell a lot from those numbers here. So there's risks on both sides. The CapEx for Meta I'm showing is $100 billion. I'll have to look. Let me see. I'm looking for the CapEx guidance, which is the story for Meta. I'm showing 125 to 145 billion CapEx for Meta. Microsoft, I'm showing let me see. Oil, what's going on with the oil? Is oil still dropping? Is the president still speaking? So back up to 88.
$88 for WTI or Brent?
WTI up to 85.
Must be looking at the wrong one then. I'm showing 85.
Yeah, we're right at 85 right now. That's what I'm saying.
I thought you said
WTI
80.
crude. Yeah,
I said
WTI
88.
crude is at 85. Yeah, I also see that Canada U.S. Trade Minister says he had comprehensive meeting with U.S. Trade Representative Greer, agreed to stay in close contact. Meta already raised its 2026 CapEx outlook to 125 to 145 billion. So again, right now, Meta CapEx is expected at 125 to 145 billion. So if that goes up even more, these might dump. Here's Meta right here. Yeah, I think last year was 72 billion. Yeah, they're raising it a lot. All right, guys, we got 25 minutes left, 23 minutes left until these release. Again, Meta, I'll put this up on screen. Meta's CapEx guidance is expected at 125 to 145 billion. Yeah, so today after the close, Microsoft and Meta, Azure growth, Copilot, and AI spending for Microsoft and Meta. Yeah, Microsoft didn't actually give a specific CapEx guidance, though, is what I'm finding. Their fiscal year 26 CapEx is roughly 190 billion for the calendar year of 2026, according to management commentary. Microsoft said CapEx spend would rise to over 40 billion as it keeps bringing capacity online for quarter 4. Microsoft's message is that it's still ramping hard, not slowing. And so here's some of that data here. Market crash may be coming. I don't know, brother. I'm worried about Meta. Is what I'm worried about. Meta already negatively impacted the market a few weeks ago when they said they're selling excess AI capacity. But I think markets are kind of scared on both fronts here and to a certain extent. U.S. military bases and assets. Margin calls are coming. Yeah, I mean, we're definitely a little scared heading into this right now. Yeah, I mean, the updated CapEx is already priced in, but people are worried they're going to announce higher CapEx guidance today for Meta. Right, so again, Meta top range is 145 billion. If they come in and raise that top guidance range of CapEx to 155, 160, you know, they're coming down most likely. Short term, if they grow into it, I mean, it's going to affect their margin short term is why people are worried about this, especially investors. It's the same thing with other companies, like their gross margins are going to be key here. Google's free cash flow came in negative in their earnings report after raising CapEx, right? So we did have negative free cash flow for Google. And again, we're going to be watching that here. I've had a lot of success trading these markets. I see somebody say I shouldn't have traded today. I've had a lot of success trading these markets. MU just hit 750, did it really? Yeah, so MU just broke under that pre-market low that it hit earlier. We haven't been under these levels for MU. Or at these levels in MU. Since May. May was the last time MU was this low. Memory's still breaking down here. Hey, thank you, Preston. Appreciate it, bro. Yeah, the president said Fed chair Wash is brilliant. Wash has a board and it's a political one. He said he would love to see lower interest rates. I'm bullish on Microsoft. I think Microsoft is kind of a proxy for Meta, though. I think it might be a situation where, you know, Microsoft, or not for Meta, I think Microsoft is a proxy for software right now in this current market. I think we've seen Microsoft move with software a lot. And so it might be a situation where, like, Meta drops first at 4 p.m. Eastern Standard Time, right? And if Meta gets hammered from its earnings, let's say it raises CapEx again, we might not know till the earnings call, but let's just say it does. We might see Microsoft go up on that because less AI fears means stronger software, and we've seen that dynamic, that dynamic at least a little bit the last few weeks in regards to software versus AI centered. I made money going long on gold ahead of the Fed meeting because I thought we would pause and I thought markets were overpricing markets were overestimating the likelihood of a hike, and so we might get a jolt to the upside in yield-sensitive assets like gold as we pause instead of hike, which is a more dovish action, which means lower interest rate sentiment, which means more people are willing to buy more people are willing to buy gold versus bonds, because when yields are up, it means bonds are paying out more, so more people buy bonds versus gold. If we pause and don't raise interest rates, which would consequently raise yields, then and so we have lower interest rates, lower yielding bonds, more people are going to buy non-yielding assets since the yields are lower in bonds, so they're going to go to non-yielding assets like gold. And so that's the logic of the trade I took. It's kind of, some of you guys understand what I'm saying here. But the thesis was that gold would pump up after a pause, and the pause was much more likely than markets were giving it credit for. Again, we had like 35% chance of a hike. I thought that was way too high. I didn't think we were going to hike today. I think if we didn't have lower CPI or slower CPI last time, decreasing from 4.2 to 3.5, then maybe we might get a hike. But since we had that low CPI print, even if it's outdated now from higher oil prices now versus when that report came out for CPI, I still thought that was a roadblock to a hike. And so I bought gold, and it worked out really well. But a broker won't let me trade single stocks yet. I'm assuming you mean single stock futures. The volume I'm seeing for single stock futures, I mean, this was the problem with it before. Like, here's NVIDIA single stock futures. It's hard to trade this. I mean, I'm hoping volume increases here, but we'll see. Meta's starting to push towards lows. Market on close, yeah, it drops in what, 8 minutes? It won't work. Bonds will keep rising because the Fed doesn't control it. Yeah, but it's just the initial reactions to gold, right? Like, I immediately covered the gold position into the spike. If anybody watched the FOMC aspect of the stream, like, I immediately sold into the spike. And we got a big, nice gold running candle here if anybody watched it. Like, look at the big green candle we got in gold here. So I got in gold. My stop loss is still set. Oops. But yeah, we got in gold here. We got in gold. I can't remember where exactly. I think it was like, I feel like we got in gold like here, right? And gold ended up doing this, and we sold like up here. So, easy money. All right, so U.S. President Trump says he would like Iran tariffs and the Russian sanctions bill. That just came out as well. But Meta continues to fall. Yeah. All right, guys, we got 45 or 15 minutes. Also, if you haven't already, check out Lucid. It's a great way to help support your boy here in this channel. We appreciate it. But check out Lucid. I think bond yields will keep rising because the rest of the world doesn't trust. Yeah, maybe. We'll see. I need less than 150 subscribers to break 175,000 as well. Some of you guys I know were not subscribed, but it's time to here. Bitcoin actually just went red on the day. SanDisk, MU, and more in tech are still breaking down. I think people are worried about CapEx fears here, guys. Easy money. Yeah.
Who thinks Meta keeps going down after earnings?
I'm personally bearish, but I mean, I don't. And again, are y'all bullish or bearish on Meta? I know I said I wasn't going to ask it, but I'm going to go ahead and ask it. Are y'all bullish or bearish on Meta? I'm bearish personally, but I don't think it's a given. I'm waiting for a better discount. SPY broke bottom. Bear. Tesla's tanking. Yeah, Tesla's been absolutely brutal. Bearish. A complete crash into the close. Yeah, I mean, honestly, this is just tech fears, man. CapEx fears going into this, right? Like, that's what this is. It's CapEx fears going into this. Is that a gallon of beer? No, this is Mountain Valley water. All right.
Yeah, his beer's under the desk.
Right. Yeah.
I'm kidding.
Waiting for a better discount? Yeah, we'll see. Fancy? Yeah, we buy like cases of this stuff. Meta will crash the market overnight. Dude, I don't know. John drinks like Grizzly Adams. Grizzly Adams? He had a beard, you know. That's all I'm saying.
Yeah, right. Grizzly Adams had a beard.
He did have a beard. No idea. I'm shell shocked. John should freestyle. Y'all gotta pay me more for that.
Yeah, he doesn't freestyle for free. He only beatboxes.
Yeah. That's right. But in middle school, bro, I used to be on the desk with the pencils, like, you know. I don't know if anybody else did that. I'm pretty sure that's every kid's experience in middle school.
Used to do that in elementary school, actually, 5th grade.
Yeah, I probably did it too.
I was terrible at it, though.
I was good at it. I had a drum set, you know, so like it was just a natural extension of that drum set. All right, guys, here we go. We got 13 minutes left. 13 minutes. Meta has no chance to be a hero. I somehow think the recent months long correction is worse than the Liberation Day crash. I mean, but it's different assets. Like the NASDAQ is technically in correction mode. I think the NASDAQ is technically down 10% now, which is a correction. But memory, like SanDisk, is down 60%. MU is down substantially. You know, SK Hynix and the Kospi index have been dropping massively overnight, every night, and getting halted. We had multiple circuit breakers in the Kospi last night. And so memory, which, just to put this into perspective, right, so everybody understands this, these memory producers, they produce what's called HBM chips, high bandwidth memory. Now, you need HBM chips to create NVIDIA chips. They're a component of it. And so, and they're sold out through like 2028, really, at this point in time. And so that has been, and with all the data centers getting built and all the NVIDIA chips needed, and in that regard, all the HBM chips that are needed, you know, they've run up a huge amount over the last few years. You know, SanDisk is up a crazy percentage. Last earnings report for SanDisk, it was at 600s. Again, it hit highs of 2,400 like a month ago. So $600 to $2,400 in a quarter, basically. But the reason they're correcting is because China is getting into producing their own chips. They're buying lithography machines, which are how you create the HBM chips and more. And so people are worried about China getting into chips and the competition that might arise from that. And that's one of the reasons these chips are pulling back. I mean, one of the other reasons is just they're up so crazy. But what honestly, when you look at this, the PE ratios, like how much they earn versus the earnings, or versus the price of the stock, like PE is price to earnings ratio, right? And low is good. The PE ratios in most of these companies, especially like MU, are very good. Like their forward PE for MU is like 6 right now. That's very good for a PE ratio. So the question is, long term in these memory stocks, are we at value levels right now? And honestly, I think we might be. Does that mean they're not going to keep crashing? No, we might keep going down. But long term, I think eventually they'll rebound and go back up. The question is, where does the downward pressure stop? And, you know, again, if you are going to get involved with them, I'm not telling you what to do. I'm not an investment professional. But if you are going to get involved with them, you know, and you need to consider that, all of that. Yeah, here's the market on close data, the MOC data here. Right, 27,500s. Let's see what we get. Drops in 10 seconds. All right, here's the market on close. It looks red to me at the NASDAQ so far. I think the big story is Meta here, though. And Meta is the one that releases right at the closing bell here. Meta releases right at 4 p.m. Eastern Standard Time. Looks like a red market on close data, but Meta is the one that releases right at 4 p.m. It's expected at 710 EPS on 60.18 billion, but everything's going to pivot to CapEx guidance. So, let's see, but we're still dropping. Well, one day it doesn't go down 10%. What are you talking about? What is it? NASDAQ might hit that low of the day here if it keeps dropping. Meta just broke lows of the day at 583s right now heading into this. I think markets are getting priced into higher capex for Meta. This is earnings whisper that I'm looking at. The expectations are a little bit high here, but this is earnings whisper. Yeah, Meta's breaking lows again, 583s. Problem though is that Meta usually gives it out. Okay. 4:30 p.m. And remember, guys, tomorrow we got PCE inflation. So we got PCE inflation, GDP data going live at 8:30 tomorrow morning here as well. So we got more data coming out tomorrow morning. Q dropping like it's hot. Everything's kind of dropping here. Again, NASDAQ in correction mode here. NASDAQ just cracked lows of the day right now. Look. 27.4s. Oh.
Stop that. How much do you think Meta has to outperform?
Did you just tell me to stop coughing?
Yeah, I did.
Dude, Maddie does the same thing, bro. I'll cough, and Maddie will be like, "How dare you?" You know. Spoiled kids, man. Spoiled kids, bro. I'm saying. I'm just saying. You know.
I know. Well, you know, the cough ruins the vibe.
I'm sorry my wheeze offends you, Brett.
Okay, but it does. But
yeah.
Pat, how much do you think? How well does Meta have to perform to turn this around, turn the fall around?
I don't know. I think it all is gonna. I think it's all capex, bro. I think capex. I think it has to beat and raise guidance most likely to do well. It needs to beat and raise, right? But yeah, it needs to beat and raise. But I think that's taking a backseat to capex.
Okay.
So yeah, again, capex for Meta, the last guidance number was 125 to 145 billion. If they bump that up to like 160, we might get market dumping. Meta might fall fast. Capex fear still here. NASDAQ still flushing down here. We got 6 minutes until the close. I'm trying to look at the implied volatility. Yeah, I think markets are pricing in that with Meta here, though. We're at 583s right now. The problem is sometimes we don't get capex until the call. Margin calls coming. I don't know, dude. We'll see. I mean, it's possible, but I hope not. Yeah, Meta's implied volatility is greater than or equal to 8.4%. Amazon's is greater or equal to 7.2%. Or no, we have Microsoft today. But options are pricing in high volatility for Meta, especially based off of capex stuff. Microsoft has good earnings, dumps Meta has even earnings and goes up a little because they're pivoting from AI spending. Hey John, what's Apex promo? Is it the legacy? There's legacy accounts, but if you go to Apex's page here and you just look at, again, you can get the $59 100K account. I'm assuming that's which one you're talking about. If you go down here and you go to like the account selector and you just go to no activation fee, 100K, $59 if you use my code BGT at checkout. Code BGT at checkout will get you that discount. And again, I'll put the link up if you want to help support the channel. It's a great way to help support the channel. Most day traders lose money, and so this is just a good way to kind of limit your risk in that regard, considering most day traders just lose money. I'll put the link up. Again, you can help support the channel. Oh, the link's pinned to the bottom of the chat. So you can see the link. Yeah, all good, Evan. Yeah, Amazon Amazon and Apple are tomorrow. You can also find the links in the description, I believe, right? Yeah, you can find all the links in the description as well. Manage risk, prepare for a crash soon, big correction at best, predict capital. Yeah, I mean, I don't think that's necessarily a bad move here. I think you want to be careful right now. I told you guys last week and really early this week, I didn't like the market conditions. There's too many potential headwinds. Like there's MU corrections, memory corrections, stock market capex fears, rate hike worries, elevated inflation and oil prices, all that stuff going on. I think that's the risk. Hey, nice user. Congrats, dude. No, Sam, I can't do that, bro. Yeah, higher rates. There's just a lot of headwinds right now. SanDisk get 1,000 back down. It was at 2,400s a month ago. But here we go, guys. We got 2 minutes left, 2.5 minutes. Gold has fallen back down too. All right, NASDAQ just cracked lows of the day. Look at NASDAQ here. So NQ just cracked lows leading into the earnings report, 27,340s lows on NASDAQ. So we're still breaking down here. We're still kind of nerve-wracking right now in markets. Yeah. NASDAQ down to 27,334s here. What do we have left? We have a minute and a half left. I'm going to put Meta up because Meta's about to report. But just be careful, guys. Again, it's a scary market right now. All right, here we go. We also have QCOM, Robinhood, and more dropping right at the closing. But I'll put two charts up. We'll put Meta, and then I think what else releases right at the close? Meta's really the only one that drops. Meta and QCOM. So these are the two that should be coming out right at the closing bell. I'll make Meta a little bit larger though, but all of these are slumping down into the open or into the close. But here we go. 40 seconds here, guys. 40 seconds. Let's see what Meta does. Again, Meta could trigger everything to sell off just based off of CapEx. It's one of the biggest reports right now. I mean, it's possible NY. I mean, you always, in big numbers, you always have some people that might know it. But here we go. Here's NVIDIA. Or, I mean, here's the closing bell. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, there's the closing bell. Watch Meta here specifically. Meta's the one that you probably want to pay attention to right now. CapEx spending is important. It might not drop until the actual call, though, but let's see if we wiggle a little bit here. QCOM's already moving a little bit. All right, nothing from Meta yet. All right, there's QCOM. Nothing yet. It looks like it's out for them. QCOM's jumping up a little bit, like its numbers might be out though. Let's see. Nothing yet. They might drop right at 5, 4, 3, 2, 1. Watch for the movement right now. Yeah, there's Meta. There's Meta. Sometimes it's right at 1 o'clock or 1 minute after the close. Meta down to 574s right now, so Meta might be out. Hold on. Bear with me, pun intended. Yeah, look at Meta dump, 560s. QCOM starting to come back down as well. All right, so Meta's reacting negatively to its earnings report here. Pivoting back up, Meta posted 618 versus 714, lower EPS than expected. 618 versus 719 expected, 60.8 versus 60.2. So flat revenue and missed EPS for Meta so far. So again, flat revenue, missed EPS. There's Meta's numbers on screen right now. Again, they posted missed EPS, flat revenue. QCOM is also dropping some here, but Meta's down to 560s. This might spark an even larger sell-off in markets right now. Look at Meta drop. Again, I'm going to dig deeper into these numbers, but again, they posted AI is accelerating our core business, powering our next gen of products, and opening the door to entirely new enterprise opportunities, said Mark Zuckerberg, Meta founder and CEO. The results are already showing, and I'm optimistic about the potential ahead. They said we are raising the lower end of our expense outlook to incorporate the $2.4 billion charges related to legal proceedings recognized in the second quarter. We now expect full year 2026 expenses to be in the 165 to 169 billion range. We anticipate 2026 capex, including principal payment on finance leases, to be in the range of 130 to 145 billion, narrowed from our prior outlook. So they narrowed from our prior outlook of 125 to 145. So they raised capex very slightly, but they missed EPS by a big margin, and Meta is dumping down here. Here's QCOM's numbers up as well, but I'm going to focus on Meta right now. Here, hold on. But yeah, again, it's pretty much the same capex with slightly. Yeah. It's pretty much the same capex. Previous was 125 to 145. Now it's 130 to 145. So they raised the bottom end number of 5 billion up. Again, full year expense capex narrowed from the previous 125 to 145. It's now 130 to 145. So they raised it slightly, but a big miss in EPS. ARM just dropped here. Here's QCOM's numbers as well. But yeah, capex. Again, I'll put this number up on screen so you can see it. I had to dig and find it, but here's QCOM. Microsoft numbers are also out there at 474s. Here's Microsoft. 474 versus 424, revenue of 90 billion. So Microsoft, like I said, they might do the opposites right now. Here's Microsoft's numbers. Yeah, I see Microsoft. Yeah, thank you, Magic, for the donation, my friend. Yeah, I see Microsoft's. But the number I'm looking at, the scary number here is capex for Meta, but it's not as bad as it could be. This is Meta right here. So I'll put this number up on screen so you guys can actually see this, but this is their capex numbers. Here, let me fix this. Yeah, we anticipate 2026 capex for Meta, including principal payments on finance leases, to be in the range of 130 to 145. So the bottom end number went up a little bit, but not a crazy amount. Look, you can see it on screen right now. Meta's reacting negatively. Microsoft numbers are out. They beat EPS and revenue, but they've so far have reacted positively here. But again, Meta posted 618. They expect Q3 guidance range for revenue at 61 to 64 billion. Sales guidance 61 to 64 versus 62.6. So basically flat expected for guidance. For Meta. Robinhood is out. Yeah, I see ARM right here. I don't know if I posted this yet, but ARM is right here in chat as well. But yeah, Meta's down to 540s here on these numbers. Still dropping. So they didn't raise it by a big margin. I don't think this is that bad for Meta, to be honest here. I mean, the EPS was bad, right? But if the market's primary concern is on CapEx spending. I mean, they bumped it up a little bit on the bottom end number. Instead of 125 billion, it's 130 billion on the bottom number. It's still top line 145 billion for CapEx this year in 2026. And so it's really not as bad as it could have been. I mean, if they would have raised it to 160 or something like that, I mean, I'm sure we'd have a much bigger drop. But I mean, the big negative thing for Meta's earnings are 618 EPS versus 719 expected, a full dollar essentially under what was expected. So yeah, ARM ended up posting 45 cents. They expected 40 cents, revenue of 1.29 versus 1.26 for ARM. But they're kind of flat as they should be. I mean, their numbers are better, but
How much is Meta flushing?
I mean, it dropped from 590s down to 550s. So it's down. But again, it's not as bad as it could be here. I mean, the EPS is bad, but I think markets are just nervous. They didn't raise guidance, really, and their EPS missed. So they missed and didn't raise. Missed in inline numbers. But I think it's hard to win, right? You raise CapEx, you lose. You know, if you don't beat and raise with guidance, you lose. And so it's kind of hard to win in this scenario of markets.
Yeah.
But
Makes sense.
yeah. So what do you guys think here, bull or bear? I see ARM starting to turn back down. Anybody want to buy Meta right here? Yeah, I'm gonna ban you, Fate. You've said the same thing. You don't ever really say anything else, bro. You could be a bot. But yeah, with that said, Meta's starting to run back up. I see Starbucks drop, Microsoft 474. Microsoft did good. It started to rise back higher here, so maybe these tech earnings will save the market. Microsoft beat EPS and revenue. So Microsoft did beat and raise, but it doesn't mean anything yet. The Nasdaq's so scary right now, breaking into things. Like, look at the NQ. 27,280s. So Nasdaq's been dropping for the last hour or so after the Fed meeting. Yeah, Starbucks did great. Yeah, we're starting to see tech start to slide down here, though, with everything else. Yeah, Microsoft is out. We've already covered Microsoft's. Microsoft beat. They came in at 474 adjusted EPS versus 424 expected revenue of 90 billion. They expected 87s. So both of them beat revenue. Meta missed EPS, which is margins, by a big number. Here's Robinhood's numbers here as well. Robinhood is out. I'll put Robinhood up. They're at 90 right now. Robinhood came in at 62 versus 43. EPS revenue of 131 versus 128. So Carvana. Yeah, Carvana posted 42 versus 36, 7.37 versus 6.9. Carvana beat, though, but they're still dumping down. Look at Carvana here on these numbers. Is there a trade to get in here? Down a couple percent today, 9% for the week. Sorry to hear, bro.
Someone asked what funded account you use.
I use Apex and Lucid mostly, but a little bit of everything, to be honest. Again, if you want to check out Lucid, Lucid's great. Lucid has their new daily plan, chat. So if you look at Lucid, they have their new daily plan. Somebody asked what's like the most free way to like the free funded account. The daily plan offers no activation fee, daily payouts, no consistency once you're funded. And you can get the max discount on these with my coupon code BGT at checkout. Great way to help support the channel. They can also go direct to funded here if you want. And you can get the max discount on these as well. So you can get these for much cheaper than this price right here. If you use my code, I'll put the link up for Lucid if you want to help support the channel. But I'm going to go ahead and get out of here.
But we do appreciate any support you do decide to show. So,
Yeah.
Thank you ahead of time.
Yeah, if you want to check out Lucid, here's the link. I appreciate the love, guys. And remember, PCE inflation tomorrow. There's the Lucid link right there if you want to check it out. You can also see the Apex link as well. You can find all of it in the description. I'm going to get out of here, though. We'll see what the earnings call bring in 20 minutes. But y'all be safe in this market, guys. Like, y'all be safe. Again, I appreciate the love. Some of these links are affiliate links, obviously. But everything we do here is free. Like, I promised the stream a long time ago I wouldn't sell content. And so a great way to help support the channel is just using the code if you go to buy some of these funded accounts. Apex has the cheapest accounts. I think Lucid has the best rules once you're actually funded. The most reasonable rules. Take Profit's great for beginners, and you can get daily payouts as well. And Tradeify has like their select plans where you can kind of choose your path, which is really nice depending on which path you want to take, what kind of drawdown you want, and all that good stuff. So check them out. Use my code. I appreciate the love, guys. Tomorrow, 8:30 Eastern Standard Time. We got PCE inflation. We have GDP dropping at 8:30 tomorrow Eastern Standard Time. If we look at the expectations for PCE inflation, we do have some expectations here for PCE inflation. We have Thursday. Yeah, so PCE tomorrow. We also have jobless claims, but PCE is expected at 3.3% for core. Headline PCE expected at 3.7%. GDP is expected at 2.3% quarter over quarter for quarter two. Last time was 2.1% for quarter one. Jobless claims expected at 201. Last time they came in really low at 187. This all drops tomorrow at 8:30, so just be careful, guys. Tomorrow's a big day as well at 8:30, and then we also have a 8:30 tomorrow. And then we also have Apple and an Amazon earnings after the closing bell. So just be careful, guys. I'll see you guys later. Love to everybody here. Thanks so much for choosing me to watch the streams with. And y'all have a good one. I'll see you guys later.
Have a great day, everybody. Thanks for all the love and support. Be safe.